Namaste, I am Mohan Balnad. Welcome to Stock Basics. Now, before we begin, let me quickly introduce myself. I will keep it short, roughly the same time it takes Vodafone Ideas Network to load a WhatsApp message. My stock market journey started 20 years ago. Back then, opening a Dipmart account required more paperwork than a home loan. My first broker was Shakan. Those were the days when your broker personally knew your wife, your dog, and your nervous dog just to buy one share. I applied for IPOs just for fun, and just once, I got lucky. Sobha Developers IPO allotment at 600, sold on listing day near 975. I felt like Vijay Kedia for exactly one day. Then I re-entered Sobha at rupees 600, but very calmly, very peacefully, it walked down to 100 rupees. And I learned lesson number one of the stock market. Profits are temporary, screenshots are permanent. Fast forward 2020, COVID. Sitting at home, my son Manu casually sent me the referral link of Zerodha. I opened a Zerodha account fully online. No queue, no chai at the broker's office. Modern India. At that time, Zerodha had something called the 60-day profit challenge. For me, it sounded great. So I said, why not? Let's try. One challenge done, second challenge done, third, fourth, fifth. I kept going like a serial hero who never dies. In total, I completed 9 challenges. That means almost 2 years of trading. And here is the shocking part. I didn't lose even one. At the time, my confidence level was not normal. I was walking around like, stock market? Easy boss. Call me if you need help. If someone had asked me then, Mohan, how difficult is trading? I would have said, difficult? Where? I can't say any difficult, but the stock market was quietly sitting in the corner, smiling like Gabbar Singh in Sholay. Then one day, Zerodha said, friends, the 60-day challenge is closed. Just like that. Finished. Over. Curtain down. And that's when my real education started. Not school education, not college education, stock market education. And let me warn you, this course was very expensive. Very expensive. The fees, several lakhs of rupees. All that money gone into one single stock. Yes, one stock. Don't worry, I will tell you the name of the stock very soon. But if you are a curious cat, don't keep walking. Like Uro market, the mean lekka. Stop for a moment and look at the screen, because what happened next is a story almost every trader secretly has, but nobody likes to admit. That loss is the exact reason you are listening to this podcast today. Born from real losses, built for real investors. What is Vodafone Idea? The confused telecom baby. Okay, today we are talking about Vodafone Idea. The stock the whole market is watching. The company that was supposed to die 3 times but keeps showing up like that one relative at every family wedding, every single time. Vodafone Idea, listed as Idea on the stock exchange, is one of the India's biggest telecom companies. It was born from a 2018 merger between Vodafone and Idea Cellular, two big companies, one very big headache. Now you might ask, if they are so big, why is the stock price 9 rupees 71 paisa? Great question. Short answer, debt. A lot of debt. Like if debt was a mobile data plan, they would be on the unlimited no speed cap plan. Except the only thing with no cap is their borrowings. You know that when you are on Vodafone network in a basement, one bar, full anxiety, that's roughly how their balance sheet looked until recently. But here is the twist. The government of India stepped in. The government now owns 49% of Vodafone Idea. Yes, the same government that runs your other server now co-owns your telecom company. Definitely not going to crash on a Monday morning. The big numbers, ARPU, subscribers, and losses. Let's talk numbers. No complicated chart, I promise. If I say something confusing, drop a comment below. I will explain it over chai. First, ARPO sounds like a South Indian name, but it stands for Average Revenue Per User. Simply, how much money does Vodafone Idea makes per customer per month? In December 2025, ARPO was rupees 186. 1 year ago, it was rupees 166. So, it went up by rupees 20. Rupees 20, that is one plate goli bhaji in a corner hotel at Mangalore. But multiply rupees 20 by 19 crore customers, suddenly it's a big gully budget. But competitors are doing better. Airtel's ARPU is about rupees 230. Gap exists, but the direction Idea's ARPU is going up. That matters. Second, subscribers. How many customers? As of December 2025, 19.2 crore, that is 192 million people. Sounds massive, but this number is going down every quarter. People are leaving Vodafone and moving to Airtel or Jio. It is like that one neighborhood restaurant. The food is okay, the service is improving, but everyone keeps going to the new Timmappa hotel that opened near Bharatman. Classic Geo problem. Third, revenue. December 2025 quarter, 11,323 crore total revenue, growing quarter by quarter. Operating profit, called EBITDA, rupees 4,817 crore, margin of 43%. 43% margin sounds excellent, gold medal level, but interest expenses that same quarter was rupees 5,828 crore in one quarter, more than the operating profit itself. It's like making rupees 2 lakh from your business, spending rupees 2.2 lakh on loan even, and telling everyone that your business is doing great. The bank manager is not impressed. Neither are the analysts. Analysts cannot agree. The rating circus. Now, let's talk about what the experts say. 20 analysts are covering this stock. 20 highly paid people, expensive offices, Bloomberg terminals, very strong coffee, all looking at the same company, and they cannot agree. 30% say buy, 30% say hold, 40% say sell. This is basically the WhatsApp family group of stock analysts. Everyone has an opinion. Nobody agrees. And your money is sitting there, very confused. The consensus target price from all 20 analysts, rupees 9.97 paisa. Stock is at 9.71. Upside just 2.68%. 2.68%, my savings account gives more than that. And the savings account does not send me anxiety at 3 am. But one analyst at Citi has a target of rupees 15.10. Macro says rupees 5. Same company, same numbers. One says rupees 15, one says rupees 5. Nearly 200% difference. This is why the stock market is the only place where two qualified professionals look at the same thing and give completely opposite answers. Not even the weather department has this much disagreement, and they have satellites. Government to the rescue. The AGR lifeline. Now, here is where the government becomes the hero, or at least very powerful uncle who says, don't worry, I will handle it. AGR, adjusted gross revenue. This is a legal dispute about how much telecom companies owe the government in license fees. Vodafone Idea's AGR dues approximately rupees 87,700 crores. 87,700 crores. Not a typo. I did not add extra zeros. If you spent rupees 1 crore every single day, it would take you about 240 years to finish, by which time Jio will probably be on 15G. In January 2026, the Union Cabinet froze these AGR dues, gave a 5-year interest-free moratorium, and started a reassessment that could reduce this bill further. In plain language, the government said, we know you owe us 87,700 crore, but we are not going to kill you over it. Take a breath, build your network, survive. Why? Simple. The government owns 49% of Idea. If the company dies, the government loses too. Skin in the game. It's like lending money to your son-in-law. He may be having a startup. You may not love every decision he makes, but you cannot let it fail because if it does, your daughter moves back home and you will be watching Netflix together permanently. Mutual funds are buying. Should you? Here is something the skeptical analysts cannot ignore. In February 2026, mutual fund added 32 crore shares of Vodafone Idea to their portfolio. In 1 month, total MF holding now 528 crore shares worth approximately rupees 5,597 crore across 118 different mutual fund schemes. During this same February, stock price dropped by 10% and yet mutual funds bought more. This is what smart investors call contrarian accumulation, what big investors calls averaging down, what my wife calls wasting money. Also, look at shareholding pattern. In March 2025, retail investors, you and me, owned 23.56%. By March 2026, just 13.83%. Retail investors going out, institutional investors coming in. The small fish are scared and swimming away. The big fish are quietly eating the small fish's shares. I am not saying retail is wrong. I am just showing you the data. Observe it, think about it. Buy, sell, or hold. The verdict. Alright, the moment you were waiting for. Let me keep it very simple. Vodafone Idea in March 2026 is not a highest priority buy. Honest answer, only 30% of analysts say buy. Consensus target is barely about current price. Short-term focused actually expects a slight dip first around 922 before any recovery. However, and this is a very important however, downside protected. Government's 49% ownership creates a sovereign floor. This company is very unlikely to go to zero. AGR relief removes immediate bankruptcy risk. Idea can now breathe and build. Mutual funds buying aggressively. Rupees 5,597 crore in mutual fund holding is not small money. ARPU growing. Direction is right, even if speed is slow. If debt tie-up and 4G expansion succeed, rupees 12 to 15 is realistic in 12 to 18 months. If debt gets delayed, churn continues. Rupees 5 target from Macquarie also remains valid. Our classification. Idea is a high conviction monitoring stock, not a panic buy, not a strong sell. A watch carefully and wait for right entry. HDFC Securities add-on dips in 8 to 9 band. Target rupees 12. Motilal Oswal, not out of the woods, said. Keep watching. City, buy now. Target rupees 15. Me, I am the person who lost money in the market and is now making videos about it. So please do your own research. Talk to a Sebi registered advisor. Do not make investment decisions based on a podcast by someone whose biggest qualification is painful experience. Key insight. Vodafone Idea is a wait and watch with one eye open stock. The worst may be over. The best is not confirmed yet. If you already hold, review your stop loss. If buying, do it in small parts, not all at once. So that's Vodafone Idea. The cat with 9 lives. It should have died multiple times, but here it is, sitting as rupees 9.71 paisa. Government holding its hand. Mutual funds loading up. Whole industry watching whether it becomes rupees 15 or rupees 5. Only time and management execution will tell. But now you know the full story, and an informed investor is always better than a confused one. If you found this useful, hit the like button. I know everyone says that, but it genuinely helps the algorithm gods smile upon this channel. Subscribe for more deep dives. Drop a comment. Are you holding idea, buying more, or have you moved on to better things? Tell me below. Until next time, this is Mohan Balnad from Stock Basics. Happy investing, and may your portfolio always be in green. Good night.